was trying to find me. Welcome. This is my third time trying to do this presentation. I've had trouble with the platform, I think mainly Facebook, that was freezing my broadcast, cutting it off, not letting me broadcast. So I'll say three times is a charm, okay? So I'm gonna see if I stay live for 5 minutes, maybe 7 minutes, they might let me stay live. So I'm going to text Sybil because she was wanting to see this and let her know that I'm trying again. Hi Sybil, I'm trying again. I just sent the new post to your Facebook page, and currently I am live. I don't know for how long. So join me, okay? Thanks. Bye bye. Okay. So I sent that to Sybil so she can keep up. My apologies. I mean, what can I say? We cannot apologize for technology, can we? But as I was saying on my other session before it got disconnected, frozen first and then disconnected. And that was I was talking about yesterday. I had this terrible um experience with the Facebook platform. I was trying to broadcast originally from it, and it wouldn't allow me. So I decided, okay, well, I'll postpone it till tomorrow and schedule it from my studio. All right. Then I ran into another same problem. Can't get this broadcast through. So I'm here, and hopefully it will continue into the time that I need. Because this is really important. I want to share with y'all because a lot of people just don't know about it. And right now, with so much going on in our world today, and especially our city, people just need to know what's available for them. But yesterday, after dealing with the situation with not being able to go live, I got up from my desk too fast and tripped over my dog. So I have a skinned knee thanks to Facebook, a swollen bruise on my knee thanks to Facebook. hmm Yeah. And thankfully, I did not hurt my hip. And I have a sore palm thanks to Facebook. So I'm one that just perseveres and never give up. So I keep trying. But what I wanted to share with you today was just the basics of the different kinds of life insurance that there's available to you. Because a lot of people, and I know all my life, all I thought was it was just one kind of life insurance, you know. But that's what you don't know, and you can't be blamed for what you don't know. And it's very important, and everyone should have it. I heard on the news this morning that our city, Memphis, Tennessee, has been named Homicide City of America. That's pretty bad, isn't it? And all of us here that live in the city know how much violence we're having. Bullets don't have any name on them. You know, I used to watch a lot of the cowboy pictures series. I know y'all did too. I like to watch Matt Dillon, Gunsmoke, right, and a lot of the others. Uh, and what I can say that they had that we don't have is at least a warning before the gunshots come, right? Back in the cowboy pictures, they would always have their duels, the two gunmen, at noon. So everybody had a warning, had time to get out of the way, out of the range of the bullet, right? Yeah. Well, unfortunately, we don't have that today. And a lot of us have lost loved ones to gun violence. And we don't ever know when we will be next. We don't ever know who's going to be next. And one thing that we are experiencing that I've never experienced as long as I've lived in this city, and that's a long time, is so many children getting killed by gunshots. So many of our children. So what I see after it, as if the grief alone is not enough that a family has to go through. The families have to go and try to raise money to take care of their loved ones' funeral arrangements. A lot of them, I've seen it announced on the news that they have set up a GoFundMe account. Well, the GoFundMe account is a good thing. Don't get me wrong, but everybody don't donate to everybody. Some people have great success with it. Some people don't. I'm one of the ones that have never had any success with GoFundMe pages. So what I do if something happened to my loved one, I would have to leave it there, try to take out a loan, or try to mortgage my house or something because funeral homes are not nice like they used to be. There was a time, as James Brown used to say, there was a time when funeral homes would take pity and sympathy upon the family, charge a small amount, or do it free. There is no more free when it comes to funerals, services, or burials today. There's no more free. No more. None of it. And that's sad. So, what do? We prepare. We don't like to talk about it. Some people think it's superstitious if they buy a life insurance policy, like it's going to jinx them or something. That's not true. That's not true at all. Some people say, well, why would I invest my money and why do I need somebody else to save money for my funeral arrangements and burials? Well, maybe you don't. But some people just don't have the ability to save. They don't have the commitment to it. Because if you do have a commitment to save, then that's a good thing, right? But 90% of people don't have that commitment. You have to have a strong constitution to be able to commit a certain amount of money to a savings account every single month or week, right? Most of us can't do that. So this is why we have the life insurance policy. Hi, Sybil. Will you share this around for me? I was waiting on you before I shared my screen. So now that Sybil is here, I'm going to share my screen with y'all so that y'all can see what I mean by there's a lot of different types of insurance policies. Like I thought for the longest that um that was just one kind, but that it's more than one kind, okay? And I'm gonna blow this up just a tad because I want to show it to you all a little bit at a time, okay? So the first kind that we have is term life insurance. A lot of people don't know what that is, never heard of it. Um, term insurance, term life insurance, as it says, when you die, your spouse, children, or other beneficiaries received a fixed amount of money to replace your income. Term period of the coverage can be changed. For example, 10-year term life insurance, 15-year, and etc. On and on. Okay? A term life insurance policy locks in the rate. It gives you financial security and It's best applied for those that are young and healthy, like in their 20s and 30s, because of the cost. Although we have all of these different kinds of life insurance, it's just all of them are always cheaper. The younger you are, the cheaper it is. That's on all of them. Okay. And the term insurance, life insurance, only comes with a death benefit. In other words, a term life insurance policy has no cash value. And I'll explain that as we continue. Under term life insurance, we have two different types. We have a level term life, which is the coverage amount stays the same level for the entire term of the policy. Then we have the decreasing term life. The death benefit is designed to pay off your debt when you die. As you see, as I said, it can be financial security for you. All right, the one that everybody does know about is whole life insurance. Let's get back up here. I'm going too fast. Okay. Whole life insurance. You buy a policy and you lock in the premium and the benefit amount for your whole life. In other words, you have a set amount. You take out a 5,000, 7,000, 10,000, 20,000, like that. That's a set amount. Okay. And the premium that goes with it stays the same. It doesn't change. Rarely are there instances where they change. And as I continue my presentations, we can get into that in some later uh, broadcasts that I will do because I'm going to do these weekly. In fact, the next one I'll do will be on a Sunday. And I don't think I'm going to schedule it because it seems like I'm staying live because it wasn't pre scheduled. So I think I'll just be going live. And so you'll just have to watch for it because I don't know what time it'll be. I would like to have a set time, but it might not work. So, okay, so with whole life, the best time to buy a whole life insurance, and it's also known as a permanent life insurance. The best age is also when you're young, in your 40s and 50s. Okay. Yeah. Y'all know you probably say, well, 50 doesn't sound that young, but yeah, it is. But it does have a cash value. And under that, we have three different types of whole life insurance. Well, actually, we have under whole life insurance, we have one, two, three, four, five, six, seven types of life insurance. Okay. The first one is universal life. Matter of fact, Memphis has had a company here for years back in the 40s, well, 50s, 60s, 70s, 80s, 90s even, that was called Universal Life right down there on Vance Avenue Street. And that was the one where the insurance agent, mostly for the African American neighborhood, they came from that office. They would drive around from house to house, street to street, knocking on doors, trying to ensure that people had a life insurance policy. Well, they don't do that hardly anymore nowadays. Now it's up to you. Okay. So, universal life insurance policy has a death benefit and a cash value that earns interest. In other words, whatever the federal interest rate is on money, that's what you'll earn on the policy. And it also offers a flexible premiums. We'll get into flexible treatment, flexible premiums explanations maybe in some of our upcoming broadcasts. Okay. Then we have the variable life insurance. Under this, the death benefit amount is fixed. That means it's a set amount. Plus, you get to pick from a variety of investment options. And as with any investment, you could see some returns for use in retirement. So this is the type of policy that maybe if people might want to buy in their 40s, not ready to retire yet, 50s, not ready to retire yet, where they could actually earn interest on it, like a savings bond type of thing, uh, and so forth and so on. Then we have the variable universal life insurance, and it is a mix of a life insurance policy, a savings account, and a mutual fund. So I would say this still applies to people in their 40s and 50s. However, I would say this would be for a higher bracket income person that makes, maybe 100,000 a year or something like that. Because as we know, our jobs nowadays, um, they don't give us life insurance. They give you an option to buy medical insurance, but few of them give you an option to buy life insurance. Okay. hmm But they do. Some do, but not most. Okay. But there was a time when I first started working in the workforce and when I was young, 17, 18, 19, 20, 21, like that, they gave us, we didn't even have to pay for it. They gave us medical care and a life insurance policy, right? Yeah. And so a variable universal life insurance policy has cash value, same as the variable life, and the same as the universal life. Okay. But however, when we get down here to the indexed universal life insurance, you do not have a cash value with that because it's based on the stock market. It includes both well, the index does includes both a cash value portion. Notice it says portion and a life insurance portion with a death benefit. But it is, oh no, this is not the one. The index, yeah, this is the one. Um, but it is basically uh, based on what the stock market rates are doing, what the stock market is doing. So if the stock market on this type of policy, that's why it's called index. With this type of policy, if the stock market is doing good, your life insurance policy is doing good. Stock market doing bad, you begin to lose money on that, on your life insurance policy, which doesn't mean that it won't go back up, but it's flexible like that because it's based on stock market values. Okay. All right. The next one we have is a guaranteed universal life insurance. Your premiums stay the same because the interest rates are set from the start of the policy. What that means is that if the interest rate is good at the time that you take out your policy, then it stays the same. Even in future years, if the stock market goes down or crashes, it stays the same as it was the day that you bought the policy, as long as you pay your premium. You'll have coverage for the rest of your life. That's a guaranteed universal life insurance. Okay. All right. The next one is joint life. First to die. On the joint life first to die insurance, it's a cash value. All right. And it is a policy marketed to couples, married couples who want to share a policy between them. In other words, instead of buying two policies, they can buy one, and it's called a joint life, right? The next one is um, survivorship. Oh, let me just back up. On the joint life policy, um, you can only get this under whole life and not term insurance, not term life. Okay. Now, the survivorship, which is the second to die life insurance, is a survivorship life policy, which also includes a type of cash value policy. It pays absolutely zero benefit to anyone until both spouses die. Then it pays your children. And this is a good thing to have if you want to provide for your children after you are gone. That because the value of it has cash value, and but unfortunately, both parents would have to be deceased. But what kind of a case would that be? Maybe say a car accident, boat accident, and both parents, are unfortunately lost in the accident. Then it pays children. Okay. All right. One of the most famous ones, final expense insurance, is for people of any age, but mostly suited for people over 50, people in their 60s and 70s, 80s, even. And this is an insurance for burial. It's only for burial, but it is a cash value insurance. It has cash value, and it covers your funeral expenses when you die. And if you have enough coverage, it will also cover your burial. Now, under these types of cash value insurance, we have some exemptions. We have no medical exam insurance, so life insurance, which don't require a medical exam, but they do require the applicants to answer a health questionnaire. So, what does that mean? That's good news because that means that anyone can get life insurance under the no medical exam insurance because it does not require a medical exam, but they might ask you to answer a healthy questionnaire, your health. They're going to ask about your health. And you need to be truthful. And the reason why is because if they find that you weren't, which they will, because they have like a medical national database. And if you've ever been to the doctor for diabetes and you're on diabetes medication, they can find it. As soon as during the application process, once we put the application in for you, they're gonna check it, and you will be denied. So it's best to be truthful. All right. So let's say, for instance, that um, you don't qualify for um, the no medical. There's a simplified issue life insurance also that doesn't require medical exam, but they do require you to answer a questionnaire as well. On those two, you really want to be still truthful. But the difference is the no medical exam insurance is actually much cheaper per premium than the simplified one. So if you got pretty good health, you want to go for the simplified issue life insurance. Okay. If you got some health problems, then you want to go with the no medical exam, maybe. But the premiums will be a bit higher. All right, then we have guaranteed issue. All right, on this one, you don't have to answer any questions about your health. Of course, you know what that means, right? Your premium is going to be higher, higher, higher because you're older, 60, 70, 80, right? But many companies limit this type of coverage. This is for companies that actually do, I mean, the insurance providers themselves, rather. Many companies limit this type of coverage to people who are at least 40 years old. And some companies don't offer it to those over 80. Well, you can see why, don't you? Because most people are 70s and 80s. We're sick. We got a lot of health problems. Um, all right, then the next one is accidental death and dismemberment insurance. I have one of those also. An accidental death and dismemberment policies, or often referred to, you may hear people refer to it as an AD&D. It's a policy that pays out if you die in an accident, like in a car accident, or if you lose a limb, like people that work in a factory job with with dangerous machinery and they can't work. That's a good policy to take out, especially if you work in a dangerous environment on your job or something, right? Because this will provide for you a monthly income in case you can't work anymore. And of course, if you die in an accident, your beneficiary, whoever you name as your beneficiary, will be able to have a death benefit, whatever the amount of the policy that you take out. Okay. Finally, group life insurance. This is for companies. If you're out there, you have a small business and you are considering providing insurance, life insurance, or offering life insurance to your employees, then this would be something that you would get. A group life insurance is bought by an organization or a company. Well, the good news is usually the company will pay a certain percentage of it, and you would pay a certain percentage of it, unless the company agreed to pay all of it for you. So those are different kinds of life insurance policies that we have, and I just wanted to put that out there. Now, as I said again, I broadcast on Sunday, and on Sunday, hopefully, I'll be able to take some questions and some answers and give you some answers. But if you would like to know more, or you know someone that would like to know more, make sure that you contact me. And my phone number is running across the screen. It's 1-844-444-0102. And if you'd like to go to my Facebook page, I do have a dedicated Facebook page for my insurance, and it's Emily Pearls Insurance. How cute is that? So, you guys know me. I have been in insurance now for a year and a half, and I am loving it because you know why? Yeah, because y'all know I always help people, right? I love helping people, and it has helped me to help people. So, thank you so much for watching. And please, please share this short video. Thanks, Sybil. You're the best, my friend. Love you. Bye.